You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to Watching the Financial Survival Network. I'm Kerry Lutz. We're big on real estate, even with interest rates going up, because for the simple reason there is a shortage of housing in the United States and in many other parts of the world. And the benefits of real estate, we've heard them here many, many times: tax benefits, potential appreciation, hedge against inflation. All of these things make us bullish on real estate, even if nominal values maybe stay dead for a few years, don't go up. But the biggest problem that you're going to encounter when you invest in real estate, as are most, unless you're extremely well-heeled, is raising capital. So we've got an expert on the show today who deals with investors, helping them raise that initial capital to buy the first property. His name is Dave Dubeau. He's coming to us from north of the border in British Columbia, Canada. And Dave, it's great to have you on the show. So,
hey, Kerry.
Hey,
thanks for having me.
Hey, I'm a hypothetical real estate investor. I don't have enough money. What do I do?
Okay, well, there's a couple of scenarios. So if you're that hypothetical real estate investor and you haven't done a deal yet, and you're looking to raise money for your first deal, I'll be perfectly frank with you. Good luck.
All right. Well, thanks for coming on, and we'll talk to you again real soon there, Dave.
Well, what I'm saying is, Kerry, I mean, we got to be realistic here. So when I'm talking about raising money for a real estate deal, I'm not talking about the bank financing. I'm talking about coming up with the money for a down payment, closing costs, renovations, whatever you need to do to get into that deal. And if you're brand new to real estate investing, you want to get that first revenue property deal under your belt, there are a few different ways to do it. Number one, if at all possible, use your own cash and your own credit to do that first deal. You don't have to do that forever, but at least get that first deal under your belt with your own financial steam if you can, right? Because number one, you're going to pay real close attention to what you're doing because you've got your own skin in the game. Number two, you're going to be able to legitimately tell future investors when they ask you, hey, Kerry, how much money are you putting in the deal? And you say none. And they say, why not? You can say, because I've got it all invested in this other deal. So that's why I'm bringing on partners, joint venture partners, to keep growing. So you've got a good reason there. Okay, so that's choice number one. But if you can't do that, Kerry, there are a few options. Okay. If you got a bit of money, but not all of it, you could partner up with somebody else and somebody who's actively doing what you want to be doing and put some skin in the game, get a portion of that deal, but don't be a passive investor. What you want to do there is you want to pay to play, you want to get in the game, and you want to actively learn what the hell you're doing, what's going on with this kind of deal. So that's a really good option. If you don't have any cash whatsoever, you can still do that. You can put in some sweat equity. Let's say you've got some skills. Say you're a handy kind of guy. Then you could partner up with somebody who's actively doing what you want to do and say, hey, I don't have any money, but I got some skills. Can I work for equity? Now, don't expect to get 50% of the deal or anything like that. But even if you get just a tiny sliver of the deal, that gets your foot in the door and you can legitimately tell people, hey, you can use that as a case study. Here's a deal that I've done. Here's a deal that I was involved in. I was a partner in, and here's how it worked, right? So it's all about getting that first deal under your belt. Mm-hmm. And then worst case scenarios, Kerry, let's say by a miracle, you do convince somebody to invest in that first deal with you. It's probably going to be your mom or your dad or somebody really close to you. If you do convince them to do that, then I'm going to suggest don't try to do a 50-50 split. I would be extra generous with my investor partner for that first deal because they're taking a big risk on you because you don't know what the heck you're doing, right? So there's my advice for people that are trying to raise capital for their very first property. Now, if you already got a little bit of experience, it makes life a hell of a lot easier for raising capital.
Okay. So what about this one? How about you become a real estate agent? You go to school and you become an agent.
Absolutely unnecessary for real estate investing, but okay, keep going. Yeah.
But here's the thing: you find deals, and you're entitled to your commission 2-3%. Instead of taking it all in cash, you take it in equity in the deal. Is that viable?
I don't see why not. Sure. Then you're definitely much more involved than most realtors are in the deal, and that gets you again. But not just that. So don't just stop there. Get that little piece of equity in there, but then also be actively involved in the after purchase part of the process, right? So whether that's helping to get the thing renovated, helping to get the thing rented, managed, whatever it is, be actively involved in that. So again, you can use that as a case study for raising capital in the future.
Right. And I'm not saying, well, for one thing, if you're a realtor, presumably you have some education in real estate. You can potentially hold yourself out as an expert if you've really studied the topic, really learned about it. So, and I'm not encouraging you to go out, run out to realtor school and learn this stuff, because it's not for everybody. Let's face it. And like you said, it's not really necessary. But to get your real estate license costs you about $1,000. And if it's just to sell your own house and save on half the commission on your own house, you more than made up for it. I just happened to, I'm a recovering attorney, just happened to move to Florida, said, hey, I'll be a realtor. So when I buy and sell properties, I can retain at least half the commission. Yeah. And it's paid for itself for the rest of my life.
Well, you're one of those smart guys, Kerry, right? So that whole realtor thing was probably pretty easy for you. For some folks, the pain and the effort of actually getting that license is huge. I guess it depends state to state and region to region. I know where I'm at, it's become quite a cumbersome thing to actually get licensed.
Hey, well, in Florida, especially in Palm Beach County, where I am, every other person is a realtor. And it's to the point where, you go out with a woman who's a realtor and you don't know if she loves you for you or for your listing. And in fact, I'm starting a show called I'll Love You If You List It With Me. So, but
well, there you go, man. You've got a niche there. That's your social calendar is filled up.
Yeah. Hey, but
you can replace Tinder now.
Yeah. Well, you'll get your real estate and get romantic options as well.
There you go. All sorts of payoffs.
It's the best. Yeah. So, but seriously here. So looking at it, I mean, that's one potential strategy, and it gives you a little advantage than somebody just saying, hey, I'm going to go put together a real estate deal and market it. Actually, when you're a realtor, you got a slightly more credibility. And, I won't say that it's easy. Me being a lawyer for 35 years and then 30 years, then going for my license was a piece of cake.
Yeah.
But
yeah, I think passing the bar was several steps higher.
A little harder.
Getting your realtor. Yeah.
Just a little. But the point is, I think anybody could pass it if they put in the work and do it. So we're talking about creative financing. We're talking about marketing here. How do you find that first property that you want to go bring people into? It seems a lot easier said than done. It's like most courses presume that you've already found that property and now you're going to market it.
Mm-hmm. Well, I mean, my whole focus these days is on helping people find the capital, not so much on helping them to find the deals. However, I do have, back in the day when I first started in real estate, back when I had hair and less gray of it and all that kind of good stuff. Geez, I would like 2000.
Back when we both did here.
Oh, you're still doing good with the hair, man. You're doing all right.
Camera does a lot, but yeah.
Yeah, I just have to make sure that the glow doesn't come off the top. So back in the day when I was doing creative type deals and focusing on finding motivated sellers, that's really what we're looking for here. If you're trying to get, off market deals, is it's all about the marketing. So, one of the easiest things and the fastest things and the most effective things is vehicle signage of all things there, Kerry. And I mean, back in the day when I was doing this, I had a minivan because my kids were small, and that thing was butt ugly. It was purple of all colors, not on purpose, just that's what I had. And I plastered it with I buy houses decals and signage all around this thing. And I live in a fairly small town. I mean, there's, a small city, about 80,000 people in our area. I picked up a number of deals just from driving around in that ugly vehicle. So the only challenge is you have to watch how you drive because you're easy to spot, right? So you're not getting away with anything.
Yeah, and don't be
off or any of that kind of stuff. You got your phone number and everything all over your car. But that works. So signage, old direct mail works really well. So doing postcard mailings, there's all sorts of different kinds of mail type stuff that you can do. And nowadays it's so much easier because you can really outsource a ton of this stuff. There are companies that will source lists for you and create letters and postcards and mail them out for you. You just got to make sure that you're set up properly to take the leads and then to filter the leads as well. So there's a couple of tips. Okay.
So you got strategies for doing it. It just doesn't magically appear. And then you go on the money hunt. And hey,
well, here's where I do things differently, Kerry. My philosophy, once I started raising capital, my philosophy around that changed drastically because we always hear the gurus say, hey, find a good deal and the money will find you. And I say, well, I won't say it it's family friendly here. I say baloney to that.
We're a family publication here.
Exactly. So I say baloney to that. Try to get your investor ducks in a row first, and then go looking for the deals and making offers and tying up properties and getting stuff under contract. So when it comes to the chicken and the egg, find the money first, or at least get your investors lined up, and then you can go, making offers with a lot more confidence. Does that make sense, Kerry?
Mm-hmm. That makes a lot of sense.
Yeah.
And then, like you say, confidence. So, yeah, I like that concept, especially, hey, if you're doing a big multifamily deal, you got to have that money lined up because it doesn't grow on trees, especially in this day and age. Hey, your take, Dave, with rising interest rates, how is that affecting your business and the real estate business in general?
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million-ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well-positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, obviously, it's got a big impact on things as far as the cost of financing. So that makes it even more important that you've got your fundamentals in place. Makes it important that you're focusing on a strategy that's not completely, appreciation based or, where I'm a little worried for flippers these days because that's a little bit on the risky side, if you ask me. So,
sure.
If you've got the fundamentals in place, if you're focusing on a type of real estate investing that just makes sense long term, that's got solid cash flow and you can be seeing other profit centers besides just the crazy market appreciation everybody thought was normal for the last few years, then I think you're going to be fine. And the other side of the coin is, everybody's kind of worried about interest rates and whatnot and concerned about, well, how's this going to affect us raising capital and bringing investors on board? Well, quite frankly, In a certain way, it makes it easier because you're able to compare and contrast the kind of returns they can get with you in your real estate deal versus what they could be getting from other kinds of investments. So, yeah, that's my take on things.
Hey, so as far as markets that you would focus on now, do you focus on the stronger markets, the Floridas, the Texases, the Tennessees, or do you look at the weaker ones where there might be more opportunity?
I think you focus on where your strengths are, and it really depends on what you're doing and what kind of deals you're looking for and what kind of a team you have in place and, at what stage of your real estate investing career you're at. So there's not one simple answer to that, Kerry. It really depends on who you are and what your background is, what your experience is.
Okay. So we can forget about massive appreciation, a lot of it inflation driven. How low do you think prices go in the face of rising rates? Will we retrace the advance that we got the past 3 years, or will we retrace 50% of it, say?
Oh, well, eventually we will retrace it. It's just a matter of time. And my crystal ball sucks. Here's why I say that, Kerry. At the beginning of the I'm laughing because at the beginning of the pandemic, everybody is freaking out because everything closed down. And up here in Canada, I did a webinar, and I had, I think, 18 real estate authorities on this thing. We had 4,000 people on this webinar, signed up for this webinar, the COVID real estate action plan. Mm-hmm. And 17 out of the 18 of us on that call got it completely wrong.
I knew that was coming. Yeah. Because
and I'd like to say I was the one smart guy that got it right. I wasn't. I was as wrong as everybody else. There was only one guy on that entire call that called it, that said that this was going to create some interesting opportunities. He actually even predicted all the crap that was going to go down in your neck of the woods with the Capitol riot type stuff and all that sort of thing.
Yeah, I predicted myself.
Yeah, well,
once we were getting to lockdowns, I knew we would have social unrest, and I expected food riots. We still might get food riots at some point, very possible, in parts of the world. And when somebody pays 3/4 of their income to buy food, and then it goes up 50%, you can understand why. So no crystal ball, but you didn't go and sell your portfolio when COVID hit either, did you?
No, I didn't. I mean, I'm a long-term buy and hold kind of guy. So, real estate cyclical, it goes up, it goes down, it goes sideways, it goes flat for a while, all this kind of stuff. So, I'm not in the quick flip business myself.
Okay. Multifamily. What if the investor doesn't have a lot of money, but can qualify in the U.S. FHA, can buy a quad or a triplex or a duplex? Mm-hmm. Is that a good way to enter the biz?
So you're talking about the person that wants to get started in real estate investing?
Yeah, and needs a house as well. So
for sure.
Duplex,
that's a beautiful way to get started. Some people call that house hacking or whatever. I mean, absolutely, that is the smart way to go. You don't even have to go that far. Even if you get a single family home and you have a suite in it, a secondary suite in that, and you rent that out, and that helps cover your. What's that?
A mother-daughter.
Well, if you want to get some real experience being a landlord, rent out the suite to somebody you're not related to. But
yeah, but I mean, that's a type of house, upstairs, downstairs.
There you go. Exactly.
Split level. Hey, what about Airbnb now? You think Airbnb has peaked? We're at the saturation point for Airbnb, or is it going to do better? It's no longer such a bargain anymore. They charge you these outrageous cleaning fees. It's like getting to the point where there's not much discount compared to going to a hotel.
Yeah, I think some of the big players are getting in there, and then people are getting a little bit greedy. So it's interesting. I've interviewed a whole bunch of Airbnb experts on my podcast, Kerry, and the most recent guy I was talking about, really interesting, because he's got a data company all around Airbnb, and he was talking about, it looks like things are slumping a little bit. However, the fact of the matter was that I can't, don't quote me on this. Well, I'm on record. So, but it was something crazy. It was like the number of new units being added to the pool every month was absolutely ridiculous. So if you took that into account with the amount of new inventory that's coming on board, the demand is still really, really strong for that. But what's interesting now with the whole transformation with the pandemic was at the beginning of the pandemic, all the hot properties that were in the big centers, the big cities, right in the middle of town, condos downtown, all that kind of stuff. Those, took a kicking, and everybody kind of started realizing people wanted staycations. They wanted to get out of the city. They wanted, so they're looking for these areas within an hour's drive. And then, so you had all these secondary markets, and that really boomed. Well, now it's going back around again. So now there's a lot more demand for those big city opportunities to go, replace the hotel thing. There's starting to be a lot less demand for the staycation type stuff. So it's one of those things that's in flux. It's an interesting thing, but I think there is still a lot of legs to be had with short-term rentals. It's a very good strategy still.
I have a friend who bought one up in north of me in Florida here, bought a house, and it was a house way bigger than she needed. So she put literally a wall down the middle and put in a little kitchenette on the other side and a washer dryer. And now she's renting it out and basically living for free.
Because she's doing it with short-term rentals?
Yeah. Yep.
Perfect. Beautiful. I mean, that's kind of, I think that's like an ideal way to do it, especially when you're first getting started, and it just lowers your risk. And you know what? You got so much flexibility because if the short-term rental doesn't work out, then you can turn it into a medium-term rental, right? So instead of by the night, maybe you're doing it by the month or, 6 months at a time, or worst case scenario, turn it into a long-term rental.
Yeah. Yeah. And it's right by a major resort. So people go there, take their kids for golf camp, tennis camp, all these different activities, and then they stay at an Airbnb and they save a fortune. So
that's perfect. That's the ideal scenario for everybody.
Yep. All right, Dave. Well, hey, it's been great talking to you.
Man.
Tell us, where do we find you? How do we connect with you on the web?
All right. Well, thanks, Gary. So I've got a brand new podcast all around getting started with raising capital. It's called the How to Raise Capital 101 Show. And we've got a website called raisecapital101show.com. You can check that out, or on your favorite podcast platform. And the first 9 episodes are a mini course on my whole 9-step money partner formula. So how to go from having zero experience raising capital to raising your first 6 figures in a matter of weeks, and even 7 figures in a matter of months. So again, that's raisecapital101show.com.
All right. Well, we appreciate it. If you've got a question for Dave, shoot us an email, kl@kerrylutz.com. Don't forget, go over to the site, financialsurvivalnetwork.com. Make sure you sign up for your free newsletter. Dave, we'll definitely talk to you again. Thanks so much for coming on.
Thank you, sir. Take care.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.